I'm Dylan Ratigan. I've interviewed nearly every CEO and most world leaders during the past 25 years. And now on Bootstrapping, I'm turning my attention to the new CEOs and the irrepressible entrepreneurs leading the next generation of innovation in the world. Welcome back to tastylive. I am Dylan Ratigan. Time for another episode of Bootstrapping. My guest today, another one from the best of Republic crop, I'll call it. Sean Sargent is the founder and CEO. He's our guest. The company called Green Lithium. They're raising money. They have raised money. They're deploying capital around the idea of creating energy independence for the electric car industry in Europe. They believe there's an overdependence in Asia for lithium, and they think they have a way to solve that. And I want to learn about it. So it's a pleasure to meet you, Sean.
Good to meet you too, Dylan.
Any particular reason why you want to put a lithium factory in England versus the continent of Europe, if your play is Europe versus England? Is it just where you are?
No, it's something we looked at in quite a lot of detail and something we continue to look at. Although we took the decision that the first plant would be in the UK, we've already started a body of work to look at where else we can get benefits from putting a plant. So there's activity already underway to look at alternative locations. Initially, we looked across all of Europe, but we found there were a number of enablers to what we're trying to do, which is to build a merchant hard rock refinery in a low carbon, sustainable way. And a lot of the things we need to achieve that are only achievable in the UK within Europe at the moment.
And how substantial of a physical environment, when you create your green lithium factory, what are the dimensions? Give me some size and scope on the nature of the physical part of this and what it produces.
I mean, it's big. It's about 60 acres. The site we selected in Teesside, which is in the northeast of England, is big enough for about 3 lines. Each line's capable of producing 25,000 tons per annum of battery-grade lithium chemicals. So those 3 lines in total will take up about 60 acres. It sounds like a lot, 75,000 tons per annum, but actually it's just a small portion. It's only about 9% of the European demand by 2030.
And what qualifies you and your team? Who give us a little bit of, I want to learn a bit of, how do you come to this? What gives you standing to go around taking millions of dollars and building factories? I'm sure you have an interesting background.
Well, my personal background is I've spent about 32 years delivering projects and programs. I started off as a civil engineer working on ports and harbors, but very quickly I moved into the nuclear industry. That gave me great experience on building complex
project management for installs of these mega installs. That's what that means.
Well, actually, yes, I started in the defense sector building infrastructure for nuclear submarines, but quickly moved into the civil nuclear side of the business. I led Berkeley Power Station, a nuclear power station in the UK. I was a station director. I then went on to take a decommissioning program director role to retrieve, process, and store all the intermediate level radioactive waste on behalf of Magnox, a nuclear utility here in the UK. The rest of my career I spent with Jacobs Engineering, a very large engineering consultant, working on projects and programs, delivering complicated things.
And then you just chose lithium in this case because of the demand and the vulnerability with Asia, or did you have a prior relationship with lithium plants?
Actually, the story starts with thinking that the UK might have sources of lithium. It was an exploration project. The two initial founders were both geologists. They went around the UK with their geologist hammers, looking for resources where they might be able to establish a mine. They quickly realized there was nothing substantial enough that was going to be able to meet that European demand. So the model changed to one of building a refinery and having a merchant refinery that's got the flexibility to take those hard rock minerals from anywhere in the world and convert them to high quality battery grade chemicals. And it was at that point I got involved. They realized they needed that project delivery.
But the economic bet is, because I'm sure the decision is, do you put those factories near the mining site and ship the material, or do you put those factories near the demand site, which is, I'm sure, the argument for England? I mean, obviously, from a national security perspective, it's a no-brainer just on that.
Yes.
Other than that, is there any other reason to put it closer to demand than supply when it comes to refining?
Yeah, it's something we looked at in the early days. We looked at comparing ourselves both in terms of our carbon footprint, but also the operating costs of a refinery in China. So the existing model is the hard rock is mined in Australia. It's shipped to China. They do the conversion, and then it gets shipped around to Europe, usually in the form of cells. We know there's going to be this explosion in the production of cells and cathode active materials in Europe. So when you look at the route the material's got to take, so initially the bulk material, it's very cheap to ship when it's in the bulk form. It's much more expensive to ship when it's in the refined a lithium hydroxide monohydrate form.
So you're saying the additional weight of the rock is offset by the cheapness of the freight for that additional weight compared to
exactly
freight. Yeah. The refined product is so expensive that shipping the additional weight still makes sense.
That's precisely right. And when we looked at it, it wasn't just about cost, it was about carbon footprint. And by onshoring the production to the UK, you've got a lot more control about reducing that carbon footprint.
Which brings us to your title of your company, Green Lithium, I believe it is.
Sure. Yeah.
And so you have an addition, you have national security, you have the math we just sort of penciled through here. But then you're also, I'm sure, going to tell me that whatever you're doing in England is much better than whatever's happening in China right now.
Yeah, I mean, it's fundamental to the whole ethos of everybody in the company. We really believe that if you're going to feed this huge explosion in battery metals to meet the demand of energy transition, to meet Paris global climate limitation targets, then you've got to do it in a sustainable way. You've got to do it in a low carbon way. Otherwise, that transition, you've actually eliminated a lot of the benefit. If you produce chemicals and a lot of carbon dioxide at the same time, then you may as well have just run an internal combustion engine in the first place.
And so then who, and not so much who, but I guess it's a what question. So let's presume the best of intentions from all the investors, all the people, all the customers, everybody. But let's assume the only barrier to your green lithium is fundamentally technical on some level. What are you doing different operationally, culturally, or most importantly, technically, that they're not doing in China right now, and why is that different?
So in China, they use quite a proven technology. They've been using it for quite some years. It's an acid leach process. It's very high temperature, very high pressure, and it produces byproducts which are really difficult to move. So they end up being waste. They produce a lot of sodium sulfate. They produce 3 tons of sodium sulfate for every ton of battery chemical they produce. The fact it's high temperature and high pressure means you use a lot of energy, so it pushes up the carbon footprint. The technology we're using, it's originally called the Quebec method. So it was first used in the 70s. It's been around for decades. It's an alkali leach process. It's not used in China. It's lower temperature, lower pressure. That gives you the benefits.
Why is it not used? Is it not used just because of culture, or is there a cost of changing? Do you give the advantage of being new that you can deploy updated? Like why wouldn't they use this process? Is it more expensive?
I think it's just what the Chinese do so well. Once they get a technology and they learn how to adopt it and to implement it, then they just stick with it. They'll keep producing refineries that follow exactly the same blueprint again and again. And that's what we've seen. And they do it very successfully. I think it's really easy to underestimate how effective the Chinese have become at producing battery chemicals.
Which you then also see as a matter of national security.
Yeah, potentially. I think it's not just a question of national security. If you look at the main forecasters who say that China's sitting on the largest, fastest growing EV market in the world. And if you look at their projected demand, it outstrips their projected supply well before 2030. So in other words, the world needs China more than China needs the world.
Mm-hmm. Meaning that you could sell British lithium, green lithium, back to China into their own domestic market.
Yeah, that'll be a great day. I don't think that's going to be the immediate objective.
Sure,
we very much plan to address European markets. We see the American market as very attractive, particularly with the Inflation Reduction Act and the Atlantic Declaration, the agreement made between Rishi Sunak and Joe Biden to introduce UK critical minerals into US supply chains and still for those EVs to benefit from the subsidies that are available. So we see those other two markets. We think the Chinese market is going to be largely self-sufficient.
And so where are you on the path of execution? In other words, you're out raising money right now on Republic, and I'm sure in other quarters and all the rest of it. What are your bona fides? What's the state of the company? Do you have a running factory anywhere in the world right now?
No, we don't. We are a development company. We've been doing a lot of engineering work to support the business model and understand how the technology is going to be how it's going to work, how we're going to integrate things like carbon capture and hydrogen to reduce that carbon footprint. We've done a lot of work around the byproduct to make sure it's not a waste product, that we can use it in construction products and help the construction industry reduce its carbon footprint. And that's where we focused our energy now. The plan will be to move from where we are today. We're currently designing a scale-up plant that will allow us to develop the early workforce, to develop the commissioning and ramp-up skills required to operate a refinery of this scale. So that will be the first plant we build. That the target to get that commissioned is within 2 years. So in July 2025, we'll be.
And is the money you're raising now relevant to that factory? Is that what the money is for?
Yes, yeah. It's going to pay for the engineering work to design that factory. But then the next step will be a larger fundraise, and that will be designed around about sort of $25 million, and that will be to pay for the design of the full-scale plant. So it becomes much more expensive to design and build the full-scale plant.
And then is your hope that you can enroll government or larger bank financing to actually put up the 60 acres? Like you're basically just looking to get elevate your standing to the point where you're so credible in the deployment that someone else will step in and say, here's how much is it to make the plant?
Yeah. So the capex for the plant is about $920 million.
The $1 billion deal. So you're basically setting up an option to be the designer, manager, owner, whatever, of $1 billion lithium plant in the north of England.
That's absolutely right. Yes. And we're doing that by progressively improving the bankability of the business model, securing the raw materials, securing the offtake contracts, making sure we've got a deliverable project delivery model. We've got Societe Generale on board as our construction finance advisor, who are helping us.
De-risking that anchor investor before you get there, as far as you can.
Exactly right. Yes.
So you can say, well, what about this? And what about insurance? And what about it? Never ends.
Yeah.
But does that include pre-selling or implied pre-selling of lithium, or are you simply relying on the obvious market boom?
No, we think there will be.
It's more a matter of like, can you do this? It's more a matter of team and process than maybe demand.
Yes, well, we really believe that a vehicle manufacturer will be a key part of the equity mix for that construction fundraise. However, we've been keeping our powder dry a little bit on that. We think it's fundamental to get the best price for the lithium that we'll be producing. It's really important that we get the vertical integration up to that point ready. So we're working really closely with miners of the material to make sure we can work with them, refine their material, and then we can go to the vehicle manufacturers and say, look, we've got a ready-made supply chain here to produce all your lithium battery chemicals. How about you support this construction program?
And if everything went perfectly in terms of the process, when would you have a factory? When would you be booking sales at the big factory? Like 2 years from now?
A bit longer than that. So it's a 14-month design program followed by a 28-month construction and commissioning program. So we think we'll be making our first lithium from that full-scale plant in 2027.
So that's 4 or 5 years? They'll call it 5 years.
Yeah.
To booking revenue.
Yes.
And your argument is that this needs to be considered, whether it's in the boardrooms of the banks or the boardrooms of the car companies or the boardrooms of, departments of whatever, government budgets. Excuse me, I kicked my camera there. But that this needs to be considered adjacent to nuclear power plants or railroad stations or other sort of mega projects that you believe that non-Asian lithium refining with this new methodology is worth $1 billion and a bunch of people's time.
Yeah, well, not only do the numbers stack up, and when you really dig into it, then the returns are really exceptional. And all the financial modeling we've done to date was based on old lithium prices. They went up by a factor of 5.
I'm sure of that, but I have to discount you pretty far. You're going to give me $1. I'm going to push you down, at this point. So in addition to yourself, what else gives you the confidence that you've got the right team to do this?
Well, just going back to your previous point, I think that, when you actually look at the industry, what needs to be achieved to produce all the batteries that are required, both for electric vehicles, but also grid storage and domestic storage, it's so far beyond what's ever been produced to date. You quickly realize there's just a mountain to climb, especially if you introduce the needs of recycling.
Right. The macro, the positive drift of the marketplace. You just need a boat that floats and it'll rise. But a boat
exactly
that floats is a trick. Yeah.
Yeah, it's just huge. The point about the team, so we've really focused on, the Green Lithium team itself is quite slim. We've tried to keep it slim, but we've focused on bringing in people with both the battery metal experience, but also the project delivery experience. They'll help us manage and mitigate the risks that we know we're going to encounter through the construction program.
And you have a Rolodex. You're basically virtualizing a lot of it. You're harvesting your Rolodex, and those are right around you to bring in expertise on the spots.
Exactly right. We're choosing partners very carefully. Something that's pretty unique about Green Lithium is we're very good at integrating, forming partnerships, and making sure that we come out with outcomes that help everybody in the team.
Mm-hmm. And then, do you have? And is this the first time that you've developed $1 billion core commodities project for England?
For me personally, yeah. We've got people on the team who've got that experience. We've just recruited an engineering manager in the last few weeks who's got a wealth of experience on refinery construction and commissioning. We've got other people in the team with operational experience in natural resources. And people with experience across the whole gambit, as you can imagine. So the finance experience and fundraising experience.
So you're imagining everything between at the end of the rainbow, a bank meeting and or a car meeting and or a government meeting and or a combination of all three. Plus, who knows, it's a technology company or something.
Yeah, exactly.
To stand up the deal, the big deal.
Yeah, the first step, however, is making sure we've got that integrated miner refiner deal. So that's the first deal we're looking at. And then
I noticed you've already done 2 deals at pretty healthy valuations from what I could tell. So clearly people believe both your thesis that if the boat floats, this thing's makes a gold mine look like for the losers, but also that you're very credible in your path. I mean, if you're raising money at $25 or $50 million valuation on really the credibility of your path between here and the bucket of gold, that in and of itself is a compliment, I would say.
Yeah, there's a lot of humility in the team, so you won't get us talking too much about our ability, but I've got a lot of confidence in the team. Their track record is tremendous. I've personally worked with them a lot over the years. It's a handpicked team.
Then where's the risk? Because I'm not going to audit the team either way, right? Like, who knows? It's great. I'm assuming yes. But where do you think the risk is between today and closing, or like, where's the risk right now?
Yeah, sure. So I think a lot of the binary risks we've addressed. We're expecting to get our planning permit within the next 4 days. That's a big one for us. But we've done a lot of work over the last 18 months to make sure the environmental impact assessments are completed, the public consultation. So that one's pretty much put to bed. Similarly, securing the site. We've got a great partner who's our landlord, but also does all of our cargo handling. So that's another big risk that's been allayed. The supplying the raw material is the one that usually keeps me awake at night, but we've just made so much progress on that in the last few months that that's beginning to feel quite comfortable. So I'm beginning to look forward now. I'm thinking, how hard is it going to be to commission this plant? And with a kind of very nascent battery industry developing in Europe, how ready are they going to be able to take our material to prove that it qualifies for their battery production? That's where I'm beginning to turn attention to make sure we can commission and ramp up this plant effectively. And that's really why we're building the scale-up plant. That's the primary risk.
It comes down to now engineering talent and sort of process engineering to lay out the on-ramp into this proposal.
Yes, precisely. Yeah.
Do you have competition outside of China? Is there anybody else in Europe that's running the same racket as you that you're aware of in terms of trying to bring lithium factories into town?
Yeah, there's a small number. It always surprises me there aren't more in many respects. I think what most of the forecasters say is even if all of these projects are successful, there's still going to be a 40% undersupply compared to that European demand. So there's plenty of room. I'd say the market in Europe is split two ways. There's some people who are trying to develop relatively novel technologies to extract lithium from geothermal brines. And there's some interesting projects emerging on that front. In terms of hard rock processing, it's a much smaller number. There's a company in Finland that's doing something similar to us, but on a smaller scale. There's a company in Germany that's adopted to use the acid leach technology that I described earlier. There's another company in the UK that's also looking at using that acid leach technology. But I think what makes us unique is that drive to produce lithium chemicals in a sustainable way, i.e. we don't produce any waste products, we don't emit anything that we shouldn't be emitting or discharging any liquids, but also keeping that carbon footprint as close to zero as possible. And I think that's the real differentiator. I don't think anybody's working as hard as we can to produce affordable, low-carbon lithium.
Very interesting. Green Lithium's the company. I'm skeptical of your green a little bit, with all due respect, although I find you very credible. But you are talking about refining chemicals here. But still, I believe you've made it better, and hopefully much better. I'm skeptical but hopeful. How about that? Sean Sargent. Yeah. A founder and CEO at Green Lithium, coming to us live and direct out of the United Kingdom. He just walked out of the drawing room, and we've got to go back as we speak. I'm Dylan Ratigan. This is Bootstrapping. More Tasty Live right after this.